to the Short Vol Show. I found this picture behind me. I think this is like the this guy's house that we went to go visit when I was in Florida for the Cubs playoffs several years ago. This looks like his place on Hibiscus Island. I can't tell completely, but I think this is his place. Anyway, we find ourselves today in like a very similar situation to where we were yesterday morning as far as the markets go. And we'll have to see if we get another reason to sell things off during the day today, which is seems like it's a very common occurrence. Let's take a look at the charts real quick here. And maybe I can move myself kind of out of the way here. All right, so the fine print up there is E-minis up 28, Dow futures up almost 300, NASDAQ up 85, and the VIX down 1.15, and the front month futures are down 91 cents. So kind of coming into the day the same as yesterday. Remember now, at the end of the day yesterday, as the indices were sort of falling, the VIX was not down at all. In fact, with the major indices actually still positive on the day, the VIX was up, at one point up almost 50 cents. So these are kind of small moves, but the question is sort of like, when does the fever break here for the VIX? That's a question for me. You know, I have this dream that I've been trying to keep alive, and the dream is for my June puts in uvxy. Okay, so June is 66 days away, and my puts are pretty far away from the strike right now. So my dream is that we get into contango and certain things come together to get this train back rolling downward in uvxy. And I realized that there's several things going against me. One thing going against me is, of course, the deleveraging of uvxy. So it used to be 2 times leveraged, and that was helpful in many ways. One of them being that to maintain a 2 times leveraged ETP that tries to mirror 2 times the movement 30 days out in the futures requires the buying of additional futures as the VIX moves up and selling of additional futures as the VIX moves down, which often results in what I like to call beta slippage, that being a loss of value due to buying futures at a high price and selling them back out at a lower price to keep with the fund's prospectus. And that effect is dampened quite a bit when you go from 2 times to 1.5 times leverage. Many viewers will be familiar with the many funds out there that have up to 3 times leverage, and how they do tend to decay over time. One of the funds that I was interested in and trading before I got into the VIX was the natural gas fund, and those products that are 2 times leverage are basically typical of these leveraged funds, and that they do decay over time. And several people, including myself, got the idea of, well, why don't you just short both funds and then just kind of accept the decay over time? So I'm talking about DGAS and UGAS right now. Let's just take a quick look at those. So UGAS currently so UGAS currently 55, and DGAS 28. Now, back when I was trading these, which was a few years ago, DGAS was some huge price of hundreds of dollars. But you can see, well, you can't see from these charts, but take my word for it, they slowly over time decay. So this is DGAS, high of 161, now 28. And UGAS, high of 4,062, now 55. And that's part of the plan with uvxy also, is to take advantage of that sort of what I like to call beta slippage decay. Here is UGAS over 3 years, high of $9,125. Now that's of course split adjusted, so it never actually traded 9,000. It's just if you adjust for all the reverse splits, that's what you get. So that's one reason. That's one way that this was losing value when it was 2 times leverage. Now, at 1.5 times leverage, it still will experience this phenomenon, but in a much smaller regard. And I'm not good enough to go through the mathematic equations with you, but I'm sure there's other resources out there that can fill in that gap. But if we look at uvxy, even on this big chart that we have right here, you can see that the low was $8.52, and I would love for it to revisit that low as soon as possible. Actually, you can't even see that low because I'm once again in the way. So let me move myself out of the way here and move this chart, I guess, up. There, now you can sort of see it. Yeah, the low down there in the corner of the screen, 852 for uvxy. And I don't need to get to the low. I just need to get to a point where I can successfully roll my position out, I would say. So if we can return to below, well, first goal is to get below 16 again. Let's look at the 180-day in uvxy, and you can see the big spike here, February 7th, and then we hit 13, and then basically 14, and we seem to be moving up, and this is not typical of a decaying leverage fund at all. This is not typical at all. This is like the opposite of typical. So this will reverse. It has to reverse, mathematically speaking, at some point, and that's what I'm banking on here. And but as long as we stay in backwardation, that will tend to lift this as opposed to pushing it down. When we are in backwardation, however, that does tend to lift this, but that beta decay feature that I was just talking about will actually counteract backwardation. So if you've got small backwardation, say less than like 3%, that's going to be largely counteracted by beta drift. Although, see, beta drift is it's hard to quantify because under the right circumstances, it doesn't exist, and it can actually have the opposite effect occur, where it will move either up or down more than expected, than the 1.5 times that they're trying to get. So it's a wild card, really, for pricing. So so there's some unknown out there. But what I have been focused on and thinking about for a while is just some sort of path to this getting back on the sell-off train again. If we back up the chart here to 3 years once again, you can see it has gone down historically throughout its life, and we want to get back on that track. We've taken a little break from it here for a while now, a couple months, which is pretty significant and pretty rare. But we're looking to get back on that train, and Maybe I won't make it through my strikes. The strikes I'm short are like, well, I actually bought in the strikes I'm short, but the puts I'm long are like the 13 puts. We may not make it through there in the next 2 months, but if we get close, I can roll the position out. But I don't want to take the loss up here because I am very confident that we will go lower than we are now. And the puts that I own are like in the gutter right now. I mean, they're trading in the in the pennies. They're like 20 cents, 30 cents. So no reason to worry about them decaying that much in the next week or two. So that's where my position sits, which is not in a wonderful place. And once again, we get bad news every day, but we will see if the markets can hold up today. It's almost like when the normal is getting bad news every day, then just having no news all of a sudden becomes bullish. Let's look actually at the E-minis for a second. So this is a couple, let's see, how many days is that? Okay, so a 20-day chart, it was looking like a sell-off, but now it's looking just kind of sideways action. And it might turn out that April Fool's Day around then was the bottom. It may turn out that was kind of a quiet bottom there. But definitely moving into a period where it looks like we're getting sideways action, and that should theoretically dampen the volatility. But we already have had a over 1% move today in the E-minis and in the Dow and in the NASDAQ. I mean, pre-open, we already have a 1% move. So it doesn't appear like the realized vol is coming in right now. So that's where we stand going into the open today. Looking for uneventful day and more of a rally and dampening of volatility to get back on that short train. I hope you all are with me, and thank you for watching, and great trading today, and talk to you later.